Hello and welcome to the Small Business Briefing. I'm Brian Calley, CEO of the Small Business Association, Michigan.
Good afternoon. Thanks for joining us today. I'm Sarah Miller, Vice President of Communications at SBAM. I want to welcome one of our new elite members. They are the best furniture outlet with owner Ehad Awab. So thank you to all of our new members who have joined us recently. All right, so Brian, I think we should start off today's show with the elephant in the room. Let's talk about tariffs.
Yeah, a couple of main takeaways. What was dubbed Liberation Day by President Trump announced tariffs that I think were significantly higher than what most people had expected. They were called reciprocal tariffs, but they included really in part of the formulation a way to essentially make up trade deficits between countries, which made the rates much different than certainly the stock market was expecting. So you saw a pretty big plunge and then a 90-day pause on those reciprocal tariffs on most of them. So the first big point is that the tariffs went into place. They were higher than what were expected, but then a few days later put on pause. So that was most of them. I think somewhere between 50 and 60 countries it was put on pause, except for the universal across the board 10% tariff. So the second point is there is now in effect a 10% tariff nearly across the board. A few exceptions to that rule. On the lower side, Mexico and Canada. So with for that which falls under the USMCA, the trade agreement, the successor to NAFTA, that at the moment is exempted from everything except for a specific tariff that applies across the board on steel and aluminum at 25%. And then there is an escalating, I think it'd be fair at this point to call it a trade war between the US and China, where the US now is levying a 145% tariff on Chinese goods. And the that exempts certain electronics, like not surprisingly, iPhones. I think people probably more a political decision there to exempt iPhones because that's an experience that nearly I should say everybody. There's a lot of different types of phones, but it's one that really people would feel and feel very quickly. So there's a lot of moving pieces here. So I would put it in, there's kind of varying degrees of risk. There's a lot of countries that have come to the table and said, we're ready to negotiate. Okay. I don't think that there's any way out of that kind of 10% minimum tariff. It seems like that is a pretty determined baseline. What happens beyond that is really anybody's guess now in terms of where they started and where they could end up. Trade with China is probably going to be, in business with and through China is probably going to be your most risky bet in the future. And in probably Canada and Mexico because of the standing USMCA, probably a little less risky than other types of international trade, but we shall see. A lot of back and forth, a lot of turmoil in the markets, but I would urge people to kind of separate out the economy. We're going to talk about how the economy is doing so far and what the stock market is doing. Those are two different things, and they often get conflated. People in the political world often, they kind of pick and choose the data they want to point at and use. But these are two different things. But what one thing can cascade and lead to another. A falling stock market can make people lose confidence. In fact, I think it's clear people have lost some confidence. We're going to talk about that in a little while. But right now, things aren't settled. And that I think is the biggest weakness that we have going for us is this period of uncertainty. It's hard to know how to adjust when things settle, decisions are made, and they will be for a foreseeable future. Of course, a new equilibrium will be reached. Some people will like it. Some people won't like where it lands, but at least it will be settled. Right now, really nothing is settled. This 90-day period, though, it is a longer period, and it'll give an opportunity maybe for a little more clarity to come. But really, that's what I see as the biggest risk right now is the uncertainty.
All right, you did mention consumer sentiment. We're going to talk about that in a minute. But before we get there, can we talk about inflation? The numbers have come out since you were last on the briefing. So let us know where things stand.
Now, inflation was one of the pieces of good news that was kind of lost in all of the noise. The rate of the tariffs were such a surprise to so many that it did somewhat drown out the I'd say relatively good news that came out on inflation. Whether you look at the producer price index or the consumer price index, both of them were lower than expected. And so 2.4% was the year over year increase, down from 2.8 in February. So that's February to March. Um, the uh, the core inflation came down to 2.8%, which was the lowest since March of 2021. So that's before really inflation started to take off. So that core inflation number um, under 3 is a pretty big deal. And then the there are certain commodities though that drove the headline inflation lower, which gasoline primarily. So um, the inflation news was felt a little better than expected. Certainly better than what analysts had predicted, um, and so it for me the only kind of downside overall, like the top line looked good. The only downside is that commodities actually brought it down faster and or down more, and that's good. Lower is better anyway, no matter how you stack it up. It's just that if I could trade core inflation dropping for headline inflation, the overall, I would take it in a heartbeat. So the amount that was due to commodities, put a little bit of a damper on what was otherwise pretty good news.
All right, let's talk about consumer sentiment, though. It seems that it is faltering.
Yeah, consumer sentiment has plummeted, and so we'll see on Data Monday here a chart that shows what it looks like, and it really has fallen to levels that look more like pandemic lows. And now, so it's hard to know everything that's driving that. There's been kind of building uncertainty. If we look at the chart, you'll see that it hasn't been particularly strong. Maybe it was teetering. And then all of the kind of just negativity and uncertainty of the last period of time. Um, and here's the thing, like these are March consumer sentiment numbers. So that were just coming out. So it had really started to fall even before all the drama of the last 2 weeks and people looking at their 401k statements and that sort of thing. Consumer sentiment is important. It's this, it can be used as kind of a precursor to recessionary times because the American consumer is very, very resilient. It takes a lot to get consumers to pull back in terms of their spending in America. U.S. consumers are really probably the most resilient consumers in the world, and they keep on spending even during downtimes. But when consumer sentiment falls, spending can be held back. It's kind of interesting though. There's ups and downs. Consumers pulling back would actually help inflation, but would harm or increase the possibility of a recession. So uncomfortably low consumer sentiment right now, and probably is the thing that I think most directly points to a rough 2025 overall. If that consumer sentiment doesn't rebound in some way, then it's hard to imagine the economy holding up in the same condition that it has been.
All right, another piece of this overall puzzle here will be interest rates. So, what are the implications here?
Well, the chair of the Federal Reserve, Jerome Powell, he's clear he's not going to come to the rescue in terms of the markets. I mean, the stock markets would love to see an interest rate cut or to cut rates faster. But right now, there's these dual concerns. There's concerns about inflation. There's concerns about um, inflation or inflation and about jobs market or recession. The but the jobs report that just came out was actually just like inflation was better than expected. And so these are kind of not just better than expected, like a lot better than expected in March. So the average over the last 12 months has been a jobs report of somewhere around 158,000, I think. And if you were to look back at the March report, it was like 280,000, up 280,000. So it in a really strong jobs report. So if you're the Federal Reserve and you're looking at this and you're saying, well, inflation is coming down, the jobs market as of March looks pretty strong. That's not a scenario where they would probably uh, cut interest rates because the jobs market being what it is, that's a recipe for don't touch it. It seems like it's okay at the moment. Now, I don't think that the Federal Reserve necessarily thinks everything is okay at the moment, but the least risky path for them at the moment is to not make any big moves in interest rates. So I think that's the most likely outcome is we'll see some interest rate reductions this year, but but I don't think anything on a scale that's any different than what was expected over the last couple of months, which was pretty modest.
All right, let's move on to some health insurance news. There's some experience recently from the health insurance companies that doesn't give us much confidence that price moderation is coming anytime soon. What can you tell us here?
The two biggest insurance providers in Michigan, Blue Cross and Priority Health, both posted experience losses, meaning that the premiums that they charged were less than the claims that they paid. So if you add up all the premiums they charged and then subtract all the claims that they paid, it's a negative number. They lost money, and Blue Cross's loss was pretty big. It was over $1 billion, and so this had led the new CEO of Blue Cross to call on health systems to moderate their pricing, to bring their pricing down. The claims are just too high, and people can't afford it. But this kind of a battle of the giants. So you got the insurance companies saying we're already posting losses, our premiums aren't covering the claims. And then you have hospitals that are saying and they literally are still saying they're being underpaid. They're negotiating prices right now between insurance companies and and health systems. But at the end of the day, the payers, employers, which are the biggest payers, the biggest private sector payers, are they unfortunately this scenario it doesn't look like it holds a lot of promise for relief. In fact, quite the opposite, given the way that costs are rising within the system and the claims experience that the insurance companies have experienced over the last couple of years does not bode well for rates. So it's the sort of thing it would make sense to sort of brace for. But as I see this public discourse back and forth between the health systems, big health systems, and the bigger insurers, I think it doesn't look like there's any kind of light at the end of the tunnel with respect to health insurance costs, from what I can see.
All right, not the news we want to hear. Let's talk about a story from the Detroit News. They published a story about manufacturing jobs performance here in Michigan. So tell us how Michigan stacks up to other states.
Yeah, this was one that was a little bit, actually pay pretty close attention to this stuff, but this was actually a surprise to me when I looked at the cumulative of going back to the year before the pandemic and where Michigan stands today in terms of total manufacturing jobs. And we're actually down 4.4%. We had 400 or 628,900 manufacturing jobs in January 2019. And as of February 2025, we were down to 601,000. So less than before. And you'd think with all of the additional incentives and things that have happened with respect to um, attracting manufacturers, you'd think that it would have been perhaps the opposite. So there's a few things that are happening, and certainly automation and robotics and so forth um, are impacting overall jobs. But a lot of these big projects have not really panned out the way that they were expected to, and um, and so it will be very interesting to see what happens now with this kind of drive to onshore more manufacturing. If you look at capacity, for example, Ford in has there. I think I read where they were running at about 67 or something below 70% overall capacity in their plants. So they could onshore more uh, without building new plants, for example, at least onshore more production of current vehicles that are already made here. The that So there could be some kind of easier early wins for Michigan in the future, but you look back at the last 5 years, not good. Um, there have been some policy changes, changing away from right to work definitely was the sort of thing that kind of took Michigan off the list for new investment or as current um, Michigan-based companies are growing and perhaps growing elsewhere more. There's always attrition in manufacturing. The question is your growth, are you capturing the new stuff faster than the attrition? And in Michigan, the answer has been no. And unfortunately, we're down at the bottom three states. California, New York, and Michigan were the bottom three states when it comes to loss of manufacturing jobs. Now, our total is still tops in the nation, near top in the nation. Let's say it's a manufacturing state. But for us, as a percentage basis anyway, in terms of the loss, unfortunately, we did underperform most of the rest of the nation, which which is unfortunate. That might be a silver lining in all this uncertainty that is faced with respect to international trade policy. If there is to be onshoring, Michigan probably will benefit more from that than compared to, say, Kansas or even a Massachusetts or Maine or a lot of these states that really don't have much manufacturing. To the extent that there is onshoring of manufacturing, we'll probably be the beneficiaries of that here in Michigan. So perhaps a silver lining, but over the last 5 years, surprisingly poor performance.
All right, it's time for our Election Watch 2026 portion of the show. Let's start with the gubernatorial race.
The biggest development in the gubernatorial race is the entrance of Congressman John James on the Republican side in the Republican primary. So he joined some other candidates that are already in on the Republican side, but he was kind of the most anticipated of candidates, the one that was um, thought to be considering it, was doing some meetings, having lots of conversations, but I think a lot of folks were waiting to see what he was going to do. So he has jumped in and ran for and decided to run for governor. So it won't be a clear or an easy path, but certainly I think most people would consider him to be the front runner getting in, just given name ID and current office held, congressman in a district that covers Macomb and Oakland counties, very important counties um, for statewide elections. So that was a pretty big development on the gubernatorial side, and one that I think kind of sets the stage or sets the table. On the Democratic side in the governor's race, no big moves there. You've got Jocelyn Benson and who's Secretary of State, and Garland Gilchrist, um, the current lieutenant governor. But Benson definitely looking like the front runner in that election. I wouldn't be surprised to see John James and Jocelyn Benson start going after each other, kind of previewing a gubernatorial race for 2026. I know it's like we're only in April, but the amount of activity in this race and the Senate race is really, really something. The amount of money these candidates are raising right out of the blocks is very impressive and frankly unusual. But it just shows how central Michigan has become when it comes to these races. By the way, when John James leaves that congressional district in Southeast Michigan, that is among the closest districts in the country. And so that open race in that congressional district is going to be a marquee type of a race, one that I think that both sides are going to think they could win if they nominate or recruit in good enough candidates. If they both have top level candidates, I'd say be a contender for the most expensive uh, congressional race in the entire country. It's that type of seat that John James will be leaving. So one competitive race in the gubernatorial level leads to another one at the congressional level.
All right, what about the Senate race?
Now in the Senate, there's been some developments. When I was out last week, you probably maybe mentioned that Mallory McMorrow got into the race officially. I mean, it was very, very clear that she was going to be in a while ago and just kind of waiting and timing out the entrance. The and then just this morning, Mike Rogers, who ran this last time against Alyssa Slotkin, closest election, Senate election in Michigan history, was this last election between Slotkin and Rogers. So Rogers going to make another run of it. I think probably Rogers was waiting to see what John James was going to do. Was John James going to run for Senate as he has before, or was he going to run for governor? And so I think these things were related. When John James decided what he was going to do, Mike Rogers decided to jump in the Senate race. So that field is starting to shape up. That one was seeming like it was a little barren for a while compared to the governor's race and less interest. I will say that while Michigan has become a purple state and these are expected to be close races, I don't think that the 2026 election and the electorate that makes the decisions is going to look like the 2024 electorate. The one thing about presidential races is that they draw out lower propensity voters, people that just don't vote very often. When the presidential race is not on the ticket, and especially when Donald Trump isn't on the ticket, who really drives people that are for him or against him, really are driven out at higher levels. The formula for getting elected in 2026 is going to look very different. So it will be interesting to see if the candidates try to build coalitions uh, that look like 2024 winning coalitions, like Alyssa Slotkin won with, or like Donald Trump won with, or if they're going to make other kind of turnout assumptions and present very differently. If I were to bet, if I were a betting person, I would bet that the makeup of the electorate in 26 is going to look a fair amount different than 2024.
Now it is time for Data Monday.
All right. Boy, it just seems like there's so many things that are going on right now, and that's true on the data too. So I'm going to start here with the consumer price index. So you see both of these coming down, whether you're looking at the core inflation, which takes the commodities out, down to 2.8%. So that's good. That's better than what was anticipated or expected. And the headline inflation down to 2.4. That was reverses just a little bit of an upward bump right before that. So both good, better than expected. The Now if you separate out the consumer price services less energy, so you take out take out the commodities like gasoline, and then it got cut off the top of the slide here, but in blue, it's that those are goods less the commodities. Okay, so the core numbers. And you'll see the goods is, it looks like it's on an upward trend, but it's actually still a negative number. So these are still slightly deflationary numbers when it comes to goods. So almost a one-to-one, like in other words, no year-over-year change on core goods. On core services, that's what's driving basically all of the inflation is on services. But you'll see that services is coming down. So as the price increases and services starts to come down, then that's why you see the overall headline number coming down. Goods inflation has been kind of under and deflationary territory for several months, but services is what's keeping it higher. The producer price index, so this is the cost to produce. Again, pre-tariff. Okay, so through March, you'll see these both came down, both the headline and the core, less on the commodities of foods and energy. So also on the inflation front, really, if it wasn't for the kind of uncertainty with policy changes, I think these would be celebrated reports. I think the concern is like, wow, could the policy changes reverse these trends that otherwise would look good? Looking at the different categories, you remember when I mentioned that I would feel better if the drive in the lower number was something other than gasoline, because gasoline goes down and it goes up. It seems to move pretty quickly. It's just not the sort of thing that you can hang your hat on. Still, overall, 2.4% headline inflation, not too bad. You'll see meats, poultry, and fish and eggs still pretty high. So the things that everybody has experience with, you've got one that's down. People always feel good about gas prices being lower, and then some that are up. Things that again people have direct weekly experience with. Labor force participation in the prime labor force is categories is not where it's I know the picture's kind of covering it now, but it's actually come down lower, not pre-pandemic lower, but off the highs. So and here's the consumer sentiment, consumer expectations, consumers' expectation of future economic conditions. Look at those drops, very, very substantial drops. And I mentioned that like the type of drops in terms of steepness, just as steep as during the pandemic, in terms of levels, overall levels, same levels they were during 2022, remember when the stock market really struggled in that year, consumer sentiment fell quite a bit then too. The NFIB, now this is national, this is a Michigan survey, but looking nationally at these numbers, the NFIB's survey shows that outlook and business conditions they went up higher, but then has started to fall off now. And then this was a surprise to me here, is that the single most important problem, if you were given these four choices, as long as I've been watching this number, which is basically since the pandemic, right? I guess as you look at the history here, quality of labor pre-pandemic was the main concern, and then you see inflation shot up and passed it up, but it's just barely higher now. So there's concern about taxes, there's concern about quality of labor, and but as you notice, the cost of labor is actually not the biggest concern. So anyway, a little bit of a surprise to see quality of labor make a comeback amidst everything else that is happening. And then the real average weekly earnings, and what this is it's income growth minus inflation. And I just wanted to show this. I like to show this about once a quarter. because if you look at this here, this is when inflation exceeded wage growth, all this red down here. And so there, when the space underneath this line here with the green that is above zero, when this space exceeds all the space under here, that's when people will have made up the loss from inflation. So again, I point to a lot of things to show like where things are at the moment, and it's usually relative to last year, sometimes month over month. But in terms of the consumer experience, the American consumer experience, they have not made up the losses from the inflationary times. And that's why I don't think you're going to see consumer mood change at all. So that's what we have today. There was actually a lot of things that came out, and so I just wanted um, to share with you the what I think are the bigger things, that are driving out there, but lots of crosswinds that we see happening in the economy today. It kind of defines or defies in overall description of what to expect or what direction we're going. Jobs report and inflation normally would be very thrilled with the reports that came out for March. Consumer sentiment, and I didn't put the slide in there because we're ran out of time, is the small business sentiment, which is another NFIB index. Also, it looked just like the consumer sentiment number. So that lack of confidence, I think, is the thing. If there's anything that can kind of drag down the U.S. economy, lack of consumer confidence at the levels that they're at the moment, if those persist, bad sign.
All right, well, thanks for the report, Brian. Thanks everybody for tuning in today. We are taking a break next Monday. We'll be at our 2-day Michigan Celebrates Small Business event. I hope that you will be there and we can connect in person. We'll be back here on April 28th at 3 p.m. Have a great week.
Thanks, everybody.